Hello, ladies and gentlemen. Greg Michalowski from ForexLive.com. This is the Kickstart video. Today's date is June 4th, 2024. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. Let's get started. I'm going to start by taking a look at the 4-hour chart of the euro versus US dollar. And trading on Monday, the price initially moved to the downside and then rotated strongly to the upside, breaking above this swing area here between 1.0876 and 1.08871. We also moved above the high price from the month of May at 94, just above that 87 level, and the price moved higher. That high price ran into resistance where I had just different swing lows and swing highs through here that formed this area up here. It was really ahead of the other swing highs going back in time to these highs right through here. So it was an interim level, maybe not that as strong as you'd like, but nevertheless a level that had some interest going in the past. And we did find resistance sellers against that level move back below the 94 level and trading here today, and that ignited more selling pressure to the downside. Remember, the ECB is meeting this week, and they are expected to cut rates. Now that's in the market. But nevertheless, the euro versus US dollar going higher when they are cutting rates. The US is keeping rates unchanged for the foreseeable future. May have been stretching a bit here, so we are seeing a rotation back to the downside. The 100 bar moving average on the 4-hour chart comes in at 1.08435. And that level is also close to another level on the hourly chart, a couple levels on the hourly chart. If we take a look at the hourly chart and go back to these two moving averages, remember the 100 bar moving average of the 4-hour chart is 1.08435. The 100 and 200 hour moving averages are at 1.084, looks like 58 or 50. So within a couple of pips exists the 100, 200 hour moving average and the 100 bar moving average in the 4-hour chart. So guess what? This level is going to be a key support on this move to the downside. It's also going to be a key barometer, probably going through the ECB rate decision. Stay above is more bullish, move below would be more bearish. On the downside, we do have this low price set from yesterday, which was also a swing level going back to just right here. Here we had a swing low right here. We broke through that level. We moved back above it here, testing the 100 and 200 hour moving averages right through here, and then tried to hold support against this level before breaking to the downside and breaking to the upside. And trading yesterday, the market came down toward that level, found support buyers against it. So 108.285 would be another level, followed by the 100-day moving average. So that's on the downside. On the top side, we need to get above this swing area again at the 76 to 87 level, get above the 94 level, and then start to work toward the swing area that we saw on the 4-hour chart up here at 109.14 or 15 to 19 on the top side. Those are the top side targets. But the key level going forward, the 100 and 200 hour moving averages and the 100 bar moving average on the 4-hour chart, all of them coming right here around the 1.0844 level. Let's take a look at the dollar versus yen next, and we'll focus on the hourly chart here. Yesterday, we saw the market move sharply to the downside. We came down to a support level right through here. That level was defined by these first of all swing highs coming through here that formed the ceiling, broke above the ceiling, then fell back below the level right through here after trying to find hold support against that level, and then we use that level again as a ceiling through here before breaking above here. We did have one little break to the downside here that failed and reestablished support here before moving to the upside, and it wasn't until yesterday that the price came down to that level and found support buyers. And then in the Asian session today, we also found support buyers before moving to the upside. We did have Bank of Japan officials, USDJPY coming out, say that the Bank of Japan could look to tighten rates, and that helped to send the yen higher, the dollar yen to the downside. And we use that 155.95 swing level as a resistance right through here to help give the sellers the go-ahead to push to the downside. We have now since moved down to another swing area down here between 154.59 and 154.878 after falling below the 50% retracement, after falling below the 61.8% retracement. This is our next support, and we seem to be finding some stall against this level right here. It was ceilings through here, and also a floor through here before moving to the upside here. We came down to that level on intervention here and went a little bit below the low of this swing area through here before rebounding back to the upside. Again, intervention sent the price below that level and then rebounded higher and then fell back below it here and then tried to use that level as resistance through here before finding support here and moving to the upside. And again here, in volatile trading, we did see some other swing lows and swing highs through there. So this area is of significance, 154.59 to 87. If we can break below that level, it would open the door for further downside momentum toward our low price that we saw in not the May low, but the mid-May low at 153.59. On the top side, we'll watch the 68.2%, 61.8% retracement, 155.16, maybe up to this level right through here, maybe a little higher around to the 25 or so level on the top side as a resistance. If we can stay below that level, keeps the sellers more in control. Finally, let's take a look at the sterling versus US dollar. And again, we'll start by taking a look at the 4-hour chart and trading. Yesterday and today we moved higher and we broke above this high area through here. Now, it's an interim level before. We had other swing highs up through here, but like the euro versus US dollars level that had some interest from buyers and sellers in through here before moving to the downside. We came back up to that level before moving to the downside. It wasn't until last week we came to the level and found willing sellers. We broke above that level and we should have moved higher, but we didn't. We failed in trading here today, and you can see the momentum to the downside start to develop through here, pushing the price back into this swing area through here, but basically in the middle of the range that we saw in trading last week. That range took us from here down to here, and so we're sort of the middle of that trading range, and also in the middle of the trading range for this week, just 2 days into this week. Let's take a look at the hourly chart, see if there's any clues off of that. And what we see on the hourly chart is that our low price in trading here today is finding some support against, once again, the converged 100 and 200 hour moving averages. Those levels come in at 1.2738 to 1.2741, and our low price came just above that level. So that is showing that the buyers are trying to stay in control by staying above that level. This level is going to be the key barometer for today and going forward for the sterling versus US dollar. If the price can stay above it, then the buyers are still in play. If the price moves below it, we'd expect to move down toward the 100 bar moving average on the 4-hour chart, and this swing level right through here at 126.98. Let's call it 127 in the sterling versus US dollar, and break below that level. It opens the door for further downside momentum. On the top side, this swing area between 127.93 and 128.02 becomes a target to get to and through on the top side. We tried to go above it yesterday, but couldn't. We'll see if the market will move back up to that level, if we can get through that level and stay above that level. So there you have it, a Kickstart video where we take a look at 3 of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading today. Bye-bye now.